Welcome to Allan Berry Reports TV. I'm your host, Allan Berry Labucan from allanberryreports.com. Today we have a new installment of our Week in Review show. Before we get started, we'll start with our thank yous. We use youtube.com and ustream.tv to produce and broadcast these shows, and so they be able to make them available for you to watch at your leisure. Those are great websites for anybody that's interested in doing online shows, and we highly recommend them. If you're watching the show on our website, if you look to the left and right of me, you'll notice that we have banner sponsors. They are very important in us being able to bring this show to you. If you'd like to do some homework on those companies, just click on their banner. That'll take you to their websites where they have plenty of information for you to do your research on them. And most importantly, you the viewers, if you didn't show up, we wouldn't have a reason to do this show, so thanks a lot for tuning in. Today, we'll get right to it. Before I get started on, I just want to do a little bit of housekeeping. We kind of made some changes to our website a few months ago. One of those was to add this video player onto our website. What happens is we put the current show on there, and actually after one show is done, the previous one starts. Probably got about 20 shows on there, so you can sort of cycle through them, or you could advance through them with the little navigation bar there, and that's one way to get all of our past shows. The other way is to go on our blog. We've got all outlines on the blog there, and also if you look below me on the video player underneath there, you'll notice that we have an update section. Each time we do a show or do a public speaking engagement, we recently did a BNN interview on Business News Network, and so we put those kind of updates in there and links to how to find the shows. So that's another way to find our past shows and what we're working on. And the best way to keep up on all of our work is to be a subscriber to our email newsletter. If you look up there, you'll see a subscription button. Just fill out the information, and we'll keep you up to date on what we're working on via email. And there's no charge for that as well. So last week on our Week in Review show, we talked about some of the reasons that we feel we have long-term bullish outlook for commodities, several commodities, and we were looking for some short-term rallies for the price of gold, silver, and copper. And this week we got that rally. Coppers and silver and gold have all moved up quite nicely this past week, and we're going to talk later about where we see things finishing up the year. But before I get started on that, I wanted to mention that at the beginning of each year, we sort of do an overview of or a review of our previous year's sort of major calls, and we do a little report card on how things went. Kind of get this habit from Warren Buffett of Berkshire Hathaway has a real way of in his annual reports doing a sober look at how he did during the past year, and we do the same thing. And so then we also, after we do a review of the 2010 outlook, then we'll be doing our Outlook 2011 in the early part of January. And when getting prepared to do that, we kind of start getting into that review and outlook mode quite a bit before we put the report out. And right around now, we start to get into that sort of mentality. And so you might see some of that kind of theme to our upcoming shows, especially the Week in Review type shows as we get towards the end of 2010. Today we're going to talk about some of the price trends, a little more about price trends than supply and demand trends that we usually talked a lot about last week, being the main reasons why we have our long and short-term bullish outlook for some of the commodities. I'm on our blog right now, and I just have on the blog, we posted the Outlook 2010. You can find that at allanberryreports.com/blog. And in that report, we started out the report with our 2009 year in review and our report card on how things went. Then we started with, and then we did our Outlook 2011. Now I'm just sort of trying to navigate here while I'm talking. For us that are challenged with walking and chewing gum at the same time, just take me a second here. So, yeah, what we're gonna we talked about the exchanges. We look at the S&P 500 and the Dow Jones Industrial Average. That sort of gives us a good outlook on what's happening with the big cap stocks, industrial global kind of outlook. Then we also each year do our outlook for the Toronto Stock Exchange and the Toronto Stock Exchange Venture market. And we are in the Dow Jones and the S&P, we were looking for sort of a sideways market. And that's pretty much what we got. We were calling for it to end the year very close to where it started. Those two markets started the year. And where they would finish the year, and we're not too far off of that. We still got a few three weeks or so, 3 and a bit weeks before the end of the year, so we'll see where that one plays out. We had a definite bullish outlook for the Toronto Stock Exchange and the TSX Venture market, and that was based on our bullish outlook for many commodities. Those trends are definitely holding up. How close we get to the numbers we picked still remains to be seen, but we're kind of optimistic. Wanted to talk a little bit more about some of the other assets that we cover, and we'll start with gold. When it comes to the commodity space, a lot of people talk about gold. It wasn't always like that. I remember in the 1990s when practically nobody wanted to talk about gold, but now it definitely is in the mainstream financial media on a constant basis, and we've been following it for many, many years. And early for our 2011, or sorry, Outlook 2010, we were calling for a very strong bullish market that would take the price up into the $1,500 US dollar per ounce range. Today we're a little bit over 1,400. We've definitely had that trend right. We've had a very bullish trend for 2010 for the price of gold. We'll see if it gets to that 1,500 number. It definitely looks like we can do 1,450 to that 1,500 before the end of the year. We're expecting to see a rally into the end of the year. And so we're still optimistic that we'll hit that number. Part of the gauge of how we look at evaluating our calls is we look for getting the trend right and the price right. And if you get the trend right and pretty close on the price, that's an A grade, if you will. And so we definitely are happy with the trend call, and we're optimistic that the price will be correct as well. Silver, we were looking for a similar type move, a bullish trend. And we were looking for silver to outperform gold quite significantly. At the beginning of the year, since the beginning of the year, silver has actually been on that very positive trend, bullish trend, and has actually exceeded the price we were looking for. We were looking for a close of over around $25 US. We've already gone past that. It's beyond our optimistic view. It's moved up almost 50%. So silver's been a really good performer, and we got the trend and the price correct there. Then on our copper pick, we talk a lot about copper and oil, and one of the key reasons is that copper and oil are extremely good economic indicators. And so we'd like to keep a real close eye. Basically, our argument is that, without what happens with demand for those commodities, is definitely tells you about how things are going from a global economic perspective, and we're looking for copper to continue have a bullish trend as well, with a close of the year somewhere around the $4 US per pound. We're there right now, and it's looking very solid. So we got that trend right so far, and we're at the price as well, so that's looking good. Oil, we were looking kind of for a sideways market with a bit of an upward bias that took it to around $85 per barrel. We're there now. Again, we're a few weeks ahead of schedule, and very happy with that call. Then we move into our uranium call, and on uranium we were looking for somewhere in the neighborhood of, we were looking for the after it hit its all-time highs, it came down quite dramatically, got to around the $40 range. We were looking for it to bottom, which it did in the early part of the year, and then start to rally. We were calling for $55 by the end of the year. That's US per pound, and we're there now. We're actually about 10% above that number. So that uranium, we're really bullish on uranium. The long-term supply and demand is very bullish for uranium. We think that it's going to be an integral part of future energy supply, and so uranium is one we follow very closely. Don't have enough time to go into the bonds and interest rates too much, and the US dollar. We'll talk quickly about the US dollar. We feel that is a long-term bearish trend, that this year's had a couple of rallies from that bearish trend, but we still think when you're running up record deficits and growing the national debt as rapidly as it is, that is not a very good recipe for a bullish trend, and we think that the US dollar has more downside. We also mentioned that we felt that the commodity currencies like the Canadian dollar, would outperform the US dollar, and the currency traders would be better off in a currency like that, and that seems to be playing out quite nicely as well. So those are almost all the calls we made in our Outlook 2010. Again, if you'd like to find that report, just go to our blog and look for, there's a little tab there that says Outlook 2010, or if you look above me on the website, you'll find that the 27th edition was the one where we had our Outlook 2010 in. And so we're sort of in a bit of our review type mentality and trying to get ready for Outlooks 2011. So I don't want to get too much ahead of ourselves, but we're definitely looking for a good strong finish to the year for gold, copper, silver, uranium, and we'll see how it plays out. And so that's a wrap on our week in review. Before closing, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any effort you can make to let your friends that follow the market know about our shows is greatly appreciated. We also greatly appreciate you taking the time to watch these shows. We're well aware that everybody is busy these days, and we strive to produce a show that saves you time and brings you helpful, high-quality information. Our next show, early next week, we'll be doing we'll start the week with our In the News segment. We usually do those on Tuesday, start them on Tuesday, so look for that show. And again, best way to keep up on all of our stuff is to be on our email list, and you can subscribe above me there on the website. And we hope you can join us for our next show. All of our work can be found on our website at allanberryreports.com. We'll see you soon. Have a great day.